Welcome back to Exponential Finance, the podcast covering finance, technology and innovation, from our home in Japan and beyond. DIA is a decentralized, open-source data and Oracle platform for decentralized finance that enables market actors to source, supply and share trustable data. Decentralized finance applications are reliant on trustable and scalable data feeds to build reliable products and avoid exploitation and manipulation. DIA leverages crypto-economic incentives and the wisdom of the community to source, validate and deliver trusted financial data. And now, please welcome Paul Claudius, co-founder and board member at DIA.
Good morning, Paul. Welcome to the show.
Hi, Albert. Great to be here. Thank you.
It's been a while. I think the first time we met each other, that was the early days of DIA, actually was in 2018. So lots has been accomplished in the interim. Let's start at the beginning, shall we? When you and the team set out to build DIA, what was the idea? What problem did you set out to solve?
Yeah, it's quite some time, actually. We last met and lots of things happened during that time. In 2018, we set the foundation for DIA, and this wasn't something we decided to build out on a white piece of paper, looking at different models and believing that this might be a great business model, which will get tremendous traction. No, it was really something we built out of a proprietary need. I guess in the days pre-DeFi, or at least wasn't as frequently used as it is today, we were setting up smart contracts, holding different assets, rebalancing them, and the contracts required pricing information. Due to the absence of infrastructure which provided transparent on-chain and also off-chain asset prices, we were kind of forced to build DIA, just one building block within a dApp, a smart contract ecosystem. We over time realized, due to projects we collaborated, we knew who asked us, hey guys, how did you solve this and can you help us? Hence, just part of the product became its own animal. DIA wasn't the strategy based on a blank sheet of paper, but initiated really from a proprietary need.
It's great because you have the use case and the business requirements that you're building towards there. So you're not creating something and wait for people to use it. You actually know how to use it and what approach you want to take. And so with that in mind, obviously, you wouldn't have built it if there was something comparable in the market. What made it so difficult to solve, and why did you have to do it by yourself?
It's fair to say that it was really user-driven, initially by us. Then quickly on, other projects were, as I said, requesting us to provide them with a feed. And this was the foundation on how we set up DIA to evolve over time. So due to a lack of resources, because this wasn't a dedicated project in its early days, we used the ecosystem and the builders within it to build DIA with us. When we added new data sources, when we tried to add new feeds to the infrastructure, we set up bounties and people took over that. And we validated their work and added it to the infrastructure. This proved to be very scalable and also very efficient. And when more and more requests came in, we realized this is not just something we can keep in its current structure. And hence, we look for the right framework to have something where contributors can drive a project. And this is why we set up a Swiss association. That's a perfect legal structure for a DAO. A DAO makes a lot of sense as its integral infrastructure to most steps. People should have a say in how this is being built, and they should be provided with a maximum of transparency and should be able to criticize and validate data sources, methodologies, and general infrastructure topics. Yeah, this is which led us to building a decentralized Oracle, decentralized in its governance.
When you look at other Oracle solutions that are out there, most people might be familiar with Chainlink, for example. So is the governance one major difference in how you operate if you compare the two?
Absolutely. So that is a major difference. The governance differs significantly. So token holders do have a say in how the infrastructure is being developed over time, and they'll be able to contribute and validate. But there are also some strong differentiators when it comes to the product itself. I like to highlight those because it's not so apparent. Not even dApps sometimes understand the difference. So we provide them with some context. So most oracles out there, and there are some, and they are all doing a great job, They focus on the last mile. So basically, they're pulling from usually premium data sources, so companies who are pulling data from different markets, and they probably do this very well. And then they provide the oracle and feed it on-chain. Then there's a consensus mechanism, usually on-chain, that these different sources report the same asset. There's a high emphasis on this last mile and trying to mitigate the potential attack vector from the Oracle smart contract itself, providing the dApp with a feed. I mean, this makes a lot of sense from an academic perspective. I do believe it provides value to have a strong emphasis on the level of decentralization. I think from a practical perspective, it's very hard to actually know how decentralized a network of nodes is. No one can. It's very hard, I guess. Also, there's never been a man-in-the-middle attack of a malicious Oracle contract feeding on data in a relevant way. But usually problems or attacks derive from a feed which is possibly not wrong, but where people didn't understand the implications of what's the liquidity depth, what's the volatility of an asset, and how can this impact the depth. So we don't focus only on the last mile to bring some data on chain in a very decentralized manner, but we believe it's critical to understand where does market data come from. Hence, we integrate in all major markets, being it centralized exchanges such as Coinbase or Binance, pulling every single trade of these markets, as well as decentralized markets. And we're not only pulling Uniswap data, which also these premium data providers do. I would be extremely surprised, and this again an issue when it comes to transparency. No one knows, it's not publicly available, which markets are actually included from these premium data providers. So we are running infrastructure that pulls DEX data, not only from Uniswap or SushiSwap on ETH, but on multiple L1s and L2s, Phantom, Near, Solana, Polygon, aggregating all these data sets on a single trade level. Hence, we are uniquely positioned to provide market data across many markets. So I think if you're looking for ETH or Bitcoin price, you can't go too wrong when looking at the top oracles. I think they're all providing a great product here. But when it comes to more exotic assets, which are native to different L1s or L2s, where majority of volume is traded on, let's say, an Orca, Solana, DEX, we are uniquely positioned to provide these feeds, still using industry best standards such as volume weighted average pricing. And we can adjust these methodologies because we get the data and we manipulate it based on what use case is trying to be served here. We go way beyond what an oracle traditionally, or the majority of oracles do. We go at the source of where the trade happens to provide the best possible feed.
That's a very good explanation. Thank you for that. And I think what comes through there a bit is also, if I remember correctly, most of your team or the original team had a traditional capital markets background. And so you're familiar with the difficulty in pricing certain assets. And as you talked about market depth and all these things. So it's not only the price that matters in the end that you simply hand over on what you described as the last mile, but actually being able to audit and to make an argument as to how you derive that price in the first place.
There are some learnings from traditional markets. So how you build indices, which provides value and which you can take as a learning to DeFi. And at the same time, there's so much intransparency in traditional markets. It's also quite intransparent where Bloomberg actually, which markets they take into account and which methodology is being applied. So I think we learned here not only the benefits of what has been proven being very bulletproof when it comes to mathematical models and methodologies, but also the intransparency and how one can actually provide this transparency, which is in particular needed in DeFi because you can't reverse the trade, right? So this happens. So people need to be absolutely aware about the potential risks where data actually derives from.
And what you described in pulling all this information from centralized or decentralized exchanges, it's a huge expense to run it on a daily basis. And anybody who wants a new feed that needs to be built and the data needs to be cleansed. Obviously, there's a tokenomics model behind all of this. And so how does that work? What does the DIA token represent and how are people rewarded if they contribute in certain roles to the delivery of that information?
So DIA is a governance token that has been historically and is today really the focus of aligning interests of stakeholders across the community. At the same time, we set this up to really trying to provide to anyone who needs it transparent data. So there's no traditional paywall. People can access this data. Obviously, we have clients for whom we build dedicated solutions and they contribute to the association's treasury. But the prime focus of DIA is the governance token. Looking into the future, we're using tools that incentivize the provision of different work, provision and approval of methodologies, participation in the DAO. So there are incentives and they're being rolled out over the next month. So there's a strong focus in pushing further the level of decentralization within DIA to enable the stakeholders to contribute in various ways by proposing improvements, but also validating existing infrastructure. And this will be rewarded. 2022, huge focus on bringing the DAO and the amount of stakeholders to the next level. We have taken quite some learnings how development, and we have 50 plus contributors here who actively contributed code to DIA and taking this to other verticals within the DAO.
In the overall crypto DeFi ecosystem, there is the battle of the communities going on right now. So you mentioned classic BTC and ETH. You've got Solana, which you mentioned also. You've got Avalanche. Algorand is still around. Not quite clear who will win and whether there are multiple winners, etc. And so when you decide where to deploy your Oracle technology, how do you make a decision as to which protocol you're supporting? And you have a very long list on your website.
So I absolutely believe there will be not one winner. I think the market luckily grows, like everybody is a winner. when you look at least at asset prices and adoption and dApps being built on these multiple L1s and L2s. And this is something we very early on believed in. And hence it was quite natural, not only, I guess, from a perspective on culture, but also that we believe that multiple L1s and L2s will be relevant for different use cases. And hence, we set up our infrastructure that will be able to integrate with multiple of these L1s and L2s in a very efficient and fast way. A year ago, we started to play around with, for example, substrate-based off-chain worker. So this was pre-anything live on either Kusama or like forget about Polkadot. And I think this development and the exchange with the community there, but also other networks enabled us now to be extremely fast. And as you're saying, we have a very long list. During the past weeks, we're adding an L1, L2 every week. And for good reason, because we see that there's a ton of traction with them. So when you look at the substrate-based ecosystem, Kusama, a lot of parachains were integrated into these parachains natively. So we'll see a lot of dApps building in these parachains. And here again, we're uniquely positioned because imagine on, for example, Astar, Polkadot-based parachain, a DEX, the trading volume and assets natively being traded there, they're quite relevant to the dApps also deploying on that chain. And we are uniquely positioned to provide these feeds. So it's quite rewarding because everything which is being natively built within these ecosystems, so not just enough bridging to, but really new applications being built in these individual, somehow connected ecosystems, we provide tremendous value. And we see the reward for being quite early on believing in this cross-chain universe and multitude of ecosystems. You were mentioning a couple of L1 projects. When you look at basically the charts of the top 5 to 10 relevant tokens on an annual basis, just looking back the last 5 years, there's stuff in the top 5, which like, I don't know, half of it is kind of irrelevant, or at least in the top 10. L1s changed within their relevance. dApps also, everything what we considered by now a blue chip, which was a year ago experimental and interesting. I mean, it's not too long ago, like Compound started. So now it's given, it's like a blue chip product. Let's see where landing mostly will occur in a year's time. I think, and hence we're quite excited that we are somehow a go-to place for these dApps in these new L1s and L2s.
When you listen to that from a technical perspective, you get some jitters because you start thinking about scalability immediately, as you're going into these hot ecosystems where lots of people building, and at some point they will explode. So how do you ensure on your side that you scale sufficiently?
Yeah, I think modularity, but also, we completely exchanged the entire backbone. We're working very closely together with IBM, which enables us also to set up infrastructure, which is extremely resilient. So used by financial institutions, and where we can, apart from the resilience, also create a high level of transparency using confidential computing technology, being able to prove that code that has been deployed is actually being deployed. We worked hard in past months to ensure that backbone is extremely scalable. And then when it comes to deploying oracles on different chains, you do need to set the foundation right, that you'll be able to deploy an EVM-based oracle on a new chain. We can do this if it's needed. And if, for example, working with a great debt partner together and they say, guys, we need this in, 2 days time. Yeah, we deploy this in 48 hours, something which takes other projects, I think, a couple of weeks or months. So it's experience from doing a bunch of integrations and then looking at the processes, reducing that, and being able to rely on a very scalable and resilient infrastructure.
Do you incur transaction fees? So if I call your Oracle on Ethereum, do I incur gas fees, which then would be substantially higher than if I did the same on Solana, for example?
Very much. And hence, I think the use cases also, they shift. As an end user, I'm kind of annoyed sometimes when a trade costs me $300, or if I lock an asset in a vault, $400. So I think it's not very accessible for new entrants in the space. And of course, a lot of applications are being built on more efficient, say it's better or worse, infrastructure where costs are significantly lower. And some applications do require a very updated feed, especially when, for example, it's based on a volatile asset. It's not great if you could just updating this, once a day or every 5 hours. A lot can happen in that time. But if you're updating very frequently on ETH mainnet, an asset, you're going to have 4-digit US dollar bill on a daily basis just for gas costs. And for some projects, that's okay. One can also question, at least currently, the ecological impact, how great that is. But that doesn't work for all the projects. So for this reason, we do see most of the new projects being built on more efficient ones and alternatives. Yeah.
A few questions maybe on the data and data quality. So I think I saw on the website 2 bubbles. One was open sourced and community verified data. And then next to it was a bubble that said institutional grade data. And so how do you make the differentiation and how do they differ in terms of what you provide?
They don't. That's quite unique, and people sometimes having a hard time to say, okay, we are using industry best practices from traditional finance and how you build an indices and having this Wikipedia open source approach. But I think it's on the contrary, extremely valuable because the methodologies we're applying, yes, they provide institutional grade reference rates, but they are extremely transparent, and we involve the community in validating and contributing to these methodologies. This is a combination of both, and it's not exclusive for either one.
We look at Bitcoin prices by themselves. Obviously, as you said, you're sourcing from different exchanges and you can observe prices there. But if you look at the US, big part of the discussion around whether a physical, quote unquote, which is a digital asset at the end of the day, a physical Bitcoin ETF should be allowed is around the validity of these prices, whether they manipulate it, whether Tether issuance has an influence, etc. You had an announcement just this week, I think it was, with Morningstar to say that you're issuing a Bitcoin index price. And so, in a way, you and Morningstar must be comfortable that there's some validity to these prices.
Yeah, very much. And I guess it really depends on providing transparency on the methodology, which markets are being included and how such an index is being built. And we're adhering here to European benchmark regulation. So this is not something taken lightly. But the way this index is being calculated and provided is within this regulated framework. And I think this kind of shows the seniority of the market and what one can build. Can't really and don't really want to comment on US regulation and reasons for having today, or rather not having, a physically backed index. I'm having a hard time to believe that this is purely based on a lack of data of these markets. So I think, yes, the benchmark we're providing now with Morningstar is quite a good proof that we are in a state where this is absolutely possible.
Great insight in terms of the EU regulation. So it seems that some things are moving much faster there than maybe in any other market. I mean, even in Asia, I'm not sure I'm aware, it doesn't mean that doesn't exist, but I'm not aware of any such benchmark under a regulated methodology.
Obviously, there's lots of things which still need to be defined and clarified, and there's always a bit of back and forth between the industry and the regulator or governments trying to create regulation derived with taxing methodologies on the space. But it's moving forward, and I think at least partially some guidance has been provided, which is very beneficial to the industry.
And so lastly, if we're talking about blockchain DeFi, we also need to talk about the metaverse and NFTs, and you're also doing something in that space. And when I've read this first, like, what's the role that oracles have in NFTs and the metaverse? So what's happening there?
The metaverse, however you want to define it, and I think this is still up to discussion, it's kind of the connectivity between different technologies. So I think we're moving now from not moving away, but we're adding to a financial layer we created with DeFi as an industry, which enables transfer of value, usage of financial products to expand what Web3 can actually offer to its users. Not everybody is just fascinated by options. So I do believe we'll have a large influence. We saw this with NFTs when it comes to something related to art or communities or collectibles. This is relevant to a much broader audience. And this is all somehow connected, possibly through the metaverse, where then you have a virtual world where you interact, where you do transactions, where you need to borrow money, or where you want to invest, and where you hold certain assets which represent whatever you're wearing or some other use case. So it's just an additional layer and stack. And oracles are also relevant when it comes to NFTs. They are just non-fungible, which makes it a bit more difficult to assess, I guess, the value. We see this, and I guess we see this in the markets due to the illiquidity. Nonetheless, oracles are needed when it comes to assessing a price or, for example, providing randomness, which is in gaming and NFTs often use. So yes, for these reasons, we're very active in the space. We see a lot of growth, as I guess everybody sees. We're not only serving this new emerging growing verticals within the industry, but we're also using the tooling for our product. So we created DR ARCs on an alpha release basis. What do ARCs do? So they are a utility NFT. We use them basically for something which hasn't been addressed neither in the traditional nor the DeFi space, is how do you go about the usage of licenses when it comes to data streams? Who knows where does the data come from? And was one allowed to actually use it to, for example, create a fee which can then be used for a dApp on such and such protocol, or, for example, an index? ARCs basically represent single data sets. They're pointing to the source, and they also point to the definition of IP associated to such data sources. When present, when not, basically the owner of the data source can claim the source token and adjust the rights associated to it. And then you have an audit trail on such rights. So it brings transparency where data comes from and if it was in which way allowed to use. At the same time, ARCs are kind of an incentive mechanism for us to identify and for our stakeholders to participate in creating new and requesting new data sets, because there's a ranking hierarchy with ARCs. So when you mint one of the initial batch, depending on their rank, this influences the eligibility on a pool which is being filled by people who are minting the same data set over time. And the more people will mint this art token using a dApp to validate that they were allowed to ingest the data set, the more is in this pool. And so if you strongly believe in a certain data set, you're probably incentivized to be early, to request it in the forum, to be added, and so on, and then mint it. Having said that, it's quite early days. We set the foundation for this for certain assets. We'll roll this out. We have a couple of updates coming very shortly on the utility of the arts. Yeah, so we're quite excited about that.
Great to see the versatility of the infrastructure and the approach. So also 2018, some people would have talked about NFTs, but would have been anything but mainstream. And so the adaptability is fantastic. So it's been a wild ride through the world of oracles. Hope you and the team have a great 2022 and beyond. And hopefully we'll check in maybe a little sooner than 3 years from now again.
Yeah, for sure. Much looking forward to this. And thanks so much, Norbert, for having me and enabling me to share a bit what happened in the past and where we're going out to.
Wonderful. Thank you, Paul.
Thanks, Norbert. Bye.